In this video, we're going to talk about the update to the Advanced Child Tax Credit for 2021 that's about to go into effect with 5 major changes that you need to know about. And I'm also going to talk about how you can maximize the amount that you actually qualify for the child tax credit. But before we get into it, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. So starting with the first major change, the child tax credit moving forward is now fully refundable. So what does that mean? So a credit goes against your tax liability. So if you owe $1 in taxes, then $1 in credit would wipe away that tax liability. So in this case, the increased amount of the child tax credit is either going to be $3,000 or $3,600 per child. So that means if you owed the IRS $3,000, having one child will eliminate that tax liability. But let's say that you didn't have a tax liability. You didn't earn enough income. Your tax liability was not $3,000, but you have one qualifying child. That means you would not only have no tax liability, but you would also get whatever that difference is completely refundable. So let's say that you had no tax liability whatsoever. That means you're still going to get up to $3,600, $3,000 or $3,600. We're going to talk about that in just a second, but you can get that completely refundable. So you don't have to have a tax liability at all. So you still want to make sure that you're filing your taxes, making sure it is as accurate as possible, or update your filing status, including the amount of dependents and those that are 17 and younger, which is the next major change. So this is also going to include those that are 17 in 2021. Now that's a big change because previously it was under the age of 17, which really meant that your child had to be under the age of 17 on 12/31. So at 12/31 was the date that the IRS would look and say, okay, how old is your child on 12/31? On 12/31, if they were 17 or older, then you didn't get the child tax credit. It moved over to the dependent credit. So even if your child turns 17 in 2021, they're still eligible for the child tax credit for that increased amount. Change number 3 is the adjusted gross income phase out. Now this has dropped quite a bit. Previously, it was $200,000 or $400,000 for married filing jointly. Now it's basically in line with the stimulus checks. So now it's $150,000 for married filing jointly, where previously it was $400,000. Head of household is $112,500, and then it's $75,000 for all other taxpayers. So that is a significant drop in the adjusted gross income. Now we're going to come back to that in a few minutes just to make sure that you're maximizing the amount that you can qualify for the child tax credit. Number 4 on the list is the advancement of the child tax credit. So this is getting the child tax credit before you file your taxes, before you get your refund. And it's going to come on a monthly basis starting in July. Now, this is going to be estimated based on your 2019 or your 2020 taxes. So if you didn't file your 2020 taxes or they're not processed for whatever reason, then the IRS is going to go look at your 2019 tax return. Now, important note here is that if you had a child since then, you want to make sure that you go ahead and get that updated, or if anything changed. For example, what if you earned more than those thresholds that we just talked about with the adjusted gross income? That means you're going to want to make sure that you update it, because if you get the advance payment, you're going to have to pay it back. So you want to make sure that whatever you qualify for is what you're actually receiving. So if there is a change that you need to make sure you're making that with the IRS. Now, once I take a look at the updating tool, I'll go through that to walk you through on how to update it with the IRS. But that will be on a future video. And that payment can be up to $300 depending on the age of your child, which brings us to our last point. The child tax credit could go up to $3,000 or $3,600. Now it's $3,600 if your child is under the age of 6, so 5 and younger. So it reads that this will be effective as of December 31st. So unlike the age 17 requirement, where it's if your child turns 17 anytime in 2021, this is 12/31, the age of your child on 12/31 for either the $3,000 or the $3,600. Now it's 5 and under for $3,600 or $3,000 from 6 to age 17. So that will be the math that they're running off of. But it's up to that amount, because if you don't qualify for the full amount, then it's going to be phased out. But this is an advanced credit that you're going to get on a monthly basis starting in July. So it's going to be up to 6 payments for 2021. Now, the benefit of this is that it's smoothing out everyone's tax liability. So we've seen this with the IRS Form W-4, where they're trying to make it so you're not getting a refund and you're just paying the right amount all throughout the year. The same thing goes with the child tax credit, where they don't want you to get these large refunds or owe at the end of the year. They want to make it so it's throughout the course of the year to get the money back in your pocket, which makes a lot of sense so you don't have any surprises when you go ahead and file your taxes. But this is all in an effort to encourage you to look at your taxes before it's tax filing season, which means that if you think you're going to be at or near those thresholds and you need to maximize your child tax credit, now is a good time to look at your retirement plans, both the pre and the post tax. Now, the Roth IRA gets a lot of press because it's a great retirement planning tool, but it doesn't reduce your adjusted gross income to maximize the amount that you would qualify for the child tax credit. So it's a good idea to take a little bit closer look and in advance, start making those adjustments. So if you need to put more money into the traditional side of your 401k, 403b, or traditional IRA, now is the time to start to consider that and start making those changes away from the Roth IRA, just so you can maximize your child tax credit. Now, of course, there's gonna be a lot of people who say, you know what, I don't want that because taxes at the federal level are going up. I don't want to do that. I want to put it into the Roth IRA now because as taxes increase later on, I'd be better off. Your hindsight's always going to be 20/20 in that regard, and it's not right for every single situation. So sometimes it makes sense to use the Roth IRA. Sometimes it makes sense to use the pre-tax 401k, 403b, or traditional IRA type of plans. And if you're close to the thresholds or you think you're going to be phased out, now is a good time to make that change, or not to take the child tax credit in advance, because then you'd have to pay it back when you file your taxes for 2021 in 2022. And that is the update for the child tax credit. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.